Are you searching for huge opportunities in the stock market? Right now, there are a few no-brainer stocks that are extremely diversified. They have sticky customer bases and their financials are super solid. They're dominant players and it's almost impossible for competitors to jump in on their business. So they basically have a monopoly in their markets. And the best part, these stocks are attractively priced at this moment. I'm going to break down the top 3 safest option plays and go through step by step on the option trading platform and show you exactly what I'm doing in these stocks. Be sure and download the free options workshop in the link below. It talks about the main benefits of trading options over buying stocks. The one thing I need from you, smash that like button down below. That's all I need. I appreciate you being here. If you want to subscribe, you're certainly welcome to do that as well. Let's get started. Meta stands out for its remarkable diversification across multiple digital markets. The company operates a suite of platforms: Facebook, Instagram, WhatsApp, Messenger, and Reality Labs, serving nearly 4 billion monthly active users globally, making it one of the most widely used technology ecosystems in the world. The massive interconnected user base creates a highly sticky environment where users and businesses are deeply embedded and reliant on Meta's services for communication, advertising, and commerce. Meta's financials, they're equally impressive. In Q1 2025, Meta reported $42.3 billion in revenue, a 16% increase year over year, with net income surging 35% to $16.6 billion and an operating margin of 41%. The company's advertising business remains a cash cow, generating over $160 billion annually, while Meta continues to invest heavily in AI, virtual reality, and new technologies to secure future growth. What sets Meta apart is its near monopoly status in several different markets. Facebook dominates global social networking, WhatsApp leads in mobile messaging, and Instagram is a top platform for both social engagement and advertising. The barriers to entry for competitors are extremely high due to Meta's scale, network effects, and ongoing innovation in areas like AI and augmented reality. Despite its dominance and growth, Meta is still attractively priced. So let's jump into a trade I'm doing right now on the option trading platform. Okay, guys, we punched in Meta right here on Yahoo Finance, and you can see the 1-year chart right now where we stand. We're at 644 is the price, and the 1-year target that they have is 711. My target is much higher than that. You can see the high here in the last 52 weeks is 740, and that's only a couple of months ago, 3 months ago. And they've got a super strong business, but I like when there's lots of room for growth like that. Now we can go to the statistics page and look at the forward PE of 25 and the PEG of around 2.1. So both good. And then if we go to the earnings, the last 3 quarters beats, strong buy ratings and buy ratings by the analyst, increasing revenue and earnings quarter over quarter. So, I mean, just dominant. And growth, they've got 11.7% expected for next year. I think it's much higher than that going forward. If we look at the balance sheet, increasing revenue and net income every year. Same with assets and liabilities. Assets are increasing every year with liabilities kept in check. So this is the Tasty Trade option trading platform. There's a link down below. It's my favorite. Lots of benefits if you go through my link. We're going to click on the trade page here after we clicked in Meta up here in the upper left. And I'm going to sell a put spread. So we're going to go about 30 to 45 days out. We're already past 21 days, so that's typically when I roll. So we're going to open up the July regular option chain. I typically like to trade the regular chains rather than the weeklies just because there's more volume. So we'll go to July and we'll look to sell this the put spread because I'm bullish on the stock. If you look right now, I'm on the charts now. But you can see the 50-day is the one in green and the 200-day is in red. And we've just broke out. We just had a cross, the 50 crossing the 200. That's an extremely bullish sign. And we're fairly priced. Again, we saw that target way up higher. So trade page, July chain. We can go to around I usually like to look around the 34, 35 delta, and go $10 wide on my put spread. We can collect almost $3. I'm going to go to the 625, see what we can collect. We can collect 325. So one option contract controls 100 shares of stock. So what that means is rather than actually for a put spread, it doesn't really matter because it's defined risk. But to control 100 shares of stock in Meta, such a high price stock, $644 per share times 100 would cost $64,504. So a lot of people don't have that type of money, and that's why options are so great. So be sure and check out the link for the options trading course. It details all that. But right now we're at 325, so we can collect $325. Our max risk is the width of the spread, $10 wide. I like to collect about a third the width of the strike, so we're right there. And if you go to the curve mode here, this is what I love about Tasty Trade platform. And you can see our break even is down here. We keep that full $325. If it expires, if the price is above the 625 at the end of the expirations, which is in 49 days. I probably won't keep it that long. I like to roll around 15 to 20 or close it out. But again, super bullish in Meta. I think this is a no-brainer trade. We hit review and send and place the trade. All right, guys, the next safe option play, AMD. This one's a banger. AMD's business is highly diversified, spanning computing and graphics for PCs, data centers, embedded solutions, and gaming consoles. Its product portfolio includes CPUs, GPUs, and custom chips for major platforms, ensuring that AMD serves a wide range of customers from consumers and enterprises to cloud providers and console makers. This broad reach creates a sticky ecosystem as customers often rely on AMD's ongoing innovation and compatibility across multiple product generations. And AMD is on super solid footing. In Q1 of 2025, the company reported $7.4 billion in revenue, a 36% year-over-year increase with a strong gross margin of 50% and net income of $709 million. The company's growth is driven by momentum in both its data center and client processor businesses, with AI and cloud computing fueling further expansion. AMD's consistent investment in R&D and its ability to scale earnings highlight its operational strength and long-term potential. In several markets, AMD is approaching near monopoly status, especially in high-performance computing and gaming. Its share of the x86 market continues to grow with record gains in the server segment and strong loyalty among PC enthusiasts. The barriers to entry are high due to AMD's advanced technology, manufacturing partnerships, and established relationships with major OEMs and cloud providers. AMD is attractively priced right now and a huge opportunity. So let's jump into a trade that I'm doing on the option trading platform. All right, guys, AMD. This is a banger of a trade right now. My gosh. Let's look at Yahoo Finance summary page. We can see the chart here, the one-year chart. We're at 110 right now on the price. 52-week range was up to 187. My target for AMD is 200. I don't know why these guys have it at 127. Let's go to the stats page. Stats, forward PE 28. Look, it was at 47 and 53 last year. Super deal right now. PEG ratio, price to earnings to growth, 0.58. Unbelievable. Under 2 is good. Analysis, 3 quarters straight beats. Revenue and earnings growing consistently quarter over quarter. Strong buys and buys by the analyst. If we go down to the growth, this is what is super incredible. 43% next year, and that's due to a couple of new chips that are coming out. One later this year, and then one next year. So this one's a no-brainer. Strong income statement, revenue and net income increasing year over year, assets and liabilities increasing year over year. Super safe investment opportunity in AMD. And the strategy that I'm going to use for this one is one of my favorites. It's the poor man's covered call. Done a lot of videos on this. We go to the table mode, and I'm going to go out close to a year. Actually, I'm going to go to the March 2026. Click on the 110 to buy the 110 call for $19.65. That's $1,955. To control 100 shares, the same 100 that we're going to control with this contract, it's going to cost 110 times 100 or $11,000. I'd rather spend $2,000. What about you? Let me know in the comments below. So not only this, and again, curve mode on the option trading platform, Tasty Trade, link down below. You can see as you go up, if we get to 150, we make 2,500. We more than double our money on this trade. So no brainer. Close this up. What we're going to do is sell a call against it. I'm going to go to July. I like to go 30 to 45 days out and then sell that out of the money call. I'll go to the 120. It's going to allow $10 in upside. And look what happened when I did that. The 1955 price, I click on the 320. It's going to go down by $320. New price, $16.20. If we can collect $320 every month, $300 a month, 3 times 5 is $1,500. 3 times 6 months, we own 100 shares of stock for free. Amazon boasts a highly diversified business, generating $638 billion in 2024 revenue across online stores, third-party services, AWS, advertising, physical stores, and subscriptions. No single segment dominates, ensuring resilience. Its ecosystem is exceptionally sticky. Millions of customers and businesses rely on Prime, AWS, and its marketplace, making it hard to switch and fostering loyalty. Financially, Amazon is robust. 2024 net income hit $59.2 billion. EBITDA $123.8 billion with a 49% gross margin and $32.9 billion in free cash flow. The company holds over $101 billion in cash and more than doubled operating income to $68.6 billion. Amazon's scale in e-commerce, cloud, and digital ads creates high barriers for rivals. Despite its dominance and strong financials, the company remains attractively valued for investors. All right, guys, no-brainer trade in Amazon. We look, the price is $202 right now, and Yahoo Finance has a $238 target. We're actually near the top of the 52-week range, but I'm not concerned at all about that. 52-week range, 242. We're going to surpass that. They're dominant. If we look at the forward PE, 31, so pretty fairly priced. PEG is 2.28. I like to see under 2, but for a growth monster and as big and solid as Amazon, I mean, when are you going to stop ordering products online? You probably just ordered something last week, during the week. Let me know in the comments below. Did you? Come on, be honest. All right, let's look at the earnings. Last 3 quarters beat every quarter. Revenue and earnings growing every quarter. Q1, wow, it was down. I got to look at that. And strong buys and buys across the board from the analyst. Growth, this is where it's crazy. 17% expected next year for a huge stock like this. And income statement extremely strong. Every year, revenue increasing. Balance sheet super strong as well. So let's go to the trade page. High price stock. You could do the leaps, poor man's covered call, but I'm going to do the just sell a put spread right now. Where the green, the 50-day is coming up right on the 200-day. Good time to buy. This is extremely bullish chart. We can go to the trade page, click on July to open up the July options chain. We're in table mode. I'm going to go to the 200 right at the money, below at the money, and the 190. We'll buy the 190 by clicking on the buy, the ask, and we sold the 200 by clicking on the sell. We collect $3.20, which is $320, And we keep that 320. It's in our account right when we place this trade, when we hit review and send. Let me move my mug out of the way. As soon as we hit review and send, that drops in our account. And as long as we stay above the short strike, the 200, by 49 days, July 18th, we keep the entire 320. If not, if it moves against us, not a big deal. I just roll to the next month and collect more premium. So we can go to the curve mode, take a look. There it is, profit margin, solid. As long as it stays above, we keep that 320. Max loss is the 320 minus the $10 width of the spread. So the most we could lose is 700, but I'm confident I'm not going to lose, because if it does for some reason move against me, I'm not concerned, because it's a long-term bullish play. I know it's going to go up over time, so I just roll to the next month. But what we can do right here now is hit review and send and place the trade. All right, guys, I put a link down below for the free options workshop. Be sure and grab that. Remember to hit like and subscribe. Leave a comment. Ask a question. Let me know, are you trading these stocks? If not, what are you trading? Thanks for watching. I'll see you in the next video.